Hello, everyone. Thank you for attending another episode of a great real estate podcast. And we can talk about what various resources and U-Haul has been saying about this particular market, which is Huntsville, Alabama, which happens to be the turnkey provider here. My special guest, once again, is Maureen McCann from Spartan Invest. How are you, Maureen?
I am great, Seewing. Hi, listeners. Hi, Seewing. It is fantastic to be here.
Sounds great. Again, my name is Seewing Yee from the Yee Listen Network, and we partner well with Maureen. I send our investors or try to her marketplace. Spartan Invest is one of the leading so-called real estate turnkey provider companies in the market they're representing, which is Alabama, Tennessee, and Northern Virginia. So they cover a very good segment of the hybrid market. It's part of a Midwest region, and yet it's part of the Sun Belt Southern region as well. So anyway, they have a identity problem, yeah, identity crisis. But
and we're going to keep growing. You watch. The Carolinas are next. So
no doubt about it. I mean, okay, we have a long-term vision. You and I, we have good synergy. We have a very long-term relationship. Anyway, having said that, we are going to talk about a very hot market, which is not under the mainstream media. And today we can do a little bit different. So let me share my screen and talk about what's going on. And here we are. And without further ado, let's get to the nitty gritty. Very exciting. For those people that are watching the YouTube video, please click the like button and also click subscribe and as well. And furthermore, you can also enter spartaninvest.com and just subscribe your email to receive free newsletters. Furthermore, you can click to our website, the yeerealestaternetwork.com. At the bottom of the video, you put down your email on our database, and you will become a free member of our real estate investment club, if you will, and you will receive great educational contents, free contents, because you're a member of our organization. So you receive a whole bunch of great information. So from both of our organizations. So without further ado, so we are referring to this great article, and one of many we're going to share with you, just to get some third-party validation of what's going on in the Huntsville market that Spartan Invest is presenting. Very, very exciting. So this article, it says right here, this city saw the highest net migration in the U.S. this year. Hint, it is not Austin, Texas. It is, the drum roll, please. It is Huntsville, Alabama, sweet home, Alabama.
lucky me, lucky me.
And coincidentally, Spartan Invest are heavily invested in the Huntsville, Alabama region, and they got some great new builds. We will talk about that on another video subsequent to this one. So let's go over what this article has to say about the net migration, which is a very important trend as to where the real estate market is going on a particular region. So with that in mind, let's dive deep into this article. And of course, feel free, Maureen, to interrupt me anytime during this presentation, because I know you have some great perspective, because you guys are expert turnkey provider. You know everything what's going on down on the ground, if you will, specific neighborhood, specific house, specific mile radius, whatever, to present your great turnkey cash flow rental properties for out-of-state investors out there. So with that in mind, so let me kind of read verbatim as much as I can, not so people, and then we can highlight, talk about it. People are moving out of state at the rate of 42%, according to TransUnion, and because of remote work and all that, everybody have the ability to move where they want to. And then during the migration, per the migration report, and from rent.com, they just did some research in that people from the West and Northeast are looking to relocate to the affordable areas in the South and Midwest. And also that let's look it down here. Understanding migration trends to find which cities are attracting renters. You know, before we go any further, Maureen, you and I did a video like 9 months ago. I'm not sure exactly. During that time, I told you the epic migration is going the trending. I predicted before any of these articles or the so-called expert are onto it right now. Remember 9 months ago?
I have the text messages. Yes, we talked about this and you did call this.
Yeah, let me say this. Yeah. Let me say this again. Let me say this again, because you know, during the pandemic, right, we see the amazing amount of migrations and all the top markets in the U.S. You know, there used to be very low price markets, but now no longer in a mere few years. I'm talking about Florida and Texas and North Carolina and a few other hot markets that have skyrocketing housing prices increases. We're talking 30, 40, 50, 60% price increases in the past couple of years, which is amazing, right? Skyrocketing housing prices. Then comes around, then the locals in those areas are because their income is not that high, so they are being priced out as a renter because the skyrocketing rents, which has been going on recently. I mean, we're talking 30, 40, 50% increases in rent. I mean, it's a national rental crisis. So all those locals that making 40, 50, $60,000 in those fast rising markets like Austin, Texas, in Tampa, Florida, in Miami, and Nashville, Tennessee, and in Raleigh, North Carolina. I mean, those rents have increased, for example, from 1,000 to 1,500 or 1,500 to 2,000. And so those locals are being pushed out. They cannot afford to rent. So they have to migrate somewhere else for cheaper renting. And eventually they can buy their homes at a much cheaper price, which is in the market that we can talk about, which is in Alabama and Tennessee area. Anyway, so let's go over this. So if we understand as risk investors, if we understand the migration trends, then we could get ahead of the game and profit from it. So the rent.com says, let me see what else I say. So where the renters are leaving, it doesn't matter. Texas, Florida, North Carolina, like I mentioned. Let's keep going, and then of course once again they're leaving from all the high price markets, also New York, California, and a few other rising markets. And then the key here is where renters are going.
Mhm.
The renters tend to feel more comfortable moving to a community where within kind of close by. They're not going to move cross country. Most of them are not. So what they're doing, and let me see, let's see, you can help me also.
Yeah, you definitely called this, months ago when we saw the effects of everything rising. It's more amplified now, but you definitely saw the trend that was coming, and you did call this. And I have to say, I was like, I wonder if you made me think about it. I go, I wonder if he's really right. And it was like 24 hours later, 48 hours later, as I was noodling on the idea, it really did make a lot of sense to me. And here we get to see this annual report that's put out every single year from U-Haul, which I absolutely love this report. I'm not even sure if U-Haul even knows how valuable it is to us as real estate investors, but essentially we want to find out where the people are moving to. I don't really care where they're moving from because they're not my markets, right? But I guess I would care if they were moving from my markets, but they're really moving towards the markets that are more affordable, not only from a housing standpoint, but the property tax standpoint. They're looking for any advantage that they can to maintain or improve their, or even sustain their current quality of living. And when you are being pinched in markets like I just caught one of the lines in the article, Austin, their rent doubled in 12 months, right? So imagine you are a renter living in that market and your wages are not going up as fast as your rent is. And then you've got the compounding effect of all of the other increases in energy and gas and food costs, suddenly, how they were living before is now very tight. And I call it a little tight in the armpits, right? It's just not comfortable anymore. And so, with the ability to work remote, with the ability to find work in other areas where, gosh, you've got so much job growth in Tennessee, in Chattanooga, Alabama, Birmingham, Huntsville. Huntsville is just exploding, as this particular report has shown. And what is, it's a good thing and a bad thing. Here's why for us. So it's a good thing because we started 3 years ago in Huntsville, and there wasn't a very lot of competition. There was some, but not like there is today on the acquisition piece of finding properties. So then we decided to go ahead and build properties there because we knew that the U.S. Command Center, Redstone Arsenal, Cummings Research Park, which is the largest research, it is the second largest in the United States, the fourth largest research park in the world, where you have Lockheed Martin, Northrop Grumman, Teledyne, Airbus, all tech and aerospace related companies, which there's a lot of investment. And so
let me interrupt you a little bit. I'm a U.S. Army retired veteran, 20 years of service way back then. Okay, and then just because I'm saying that Huntsville, there's a new military branch. It's called a Space Force. Force. I mean, before we have U.S. Air Force, U.S. Navy, U.S. Army, U.S. Coast Guard. Now we have a brand new branch, which is U.S. Space Force, which is the wave of the future. Space technology and fighting the war, Star Wars, all those things. And Huntsville happens to be one of the headquarters
at the center
for the U.S. Space Force. And all the defense contractors they work with the Air Force, with the U.S. military. Yes, just like you said, they are in the Huntsville area, right? So go ahead, continue. Sorry.
Yeah. So the downside for us as a turnkey provider is we have a lot more competition on the acquisition side of the business. So it's made it a little bit more challenging to acquire distressed assets. However, we have found a solution just to build new units, which we are doing. So that's the downside. The upside is that my leasing agent looks like a rock star in the Huntsville, Athens, Decatur area, because there is such a high demand for rental properties that she leases them in a snap. And so that's the good thing for our investors, is that when we get properties in Huntsville, Athens, Decatur area, then we don't have any problem getting those rented right away, and for the higher end of the rent range, because of the sheer fierce competition for rentals.
I tell you, Maureen, I say this, I've been doing this for a very, very long time. I've been doing this investing for several decades and even more. But I'm saying this, that the Huntsville region, Alabama, is up and coming. The main media are not aware of it. The mainstream media are not a purview to what you and I already know, that we are moving into this market way before everybody else. You gotta get in front. You have to get in front of the trend. So again, the U-Haul clearly stated in a migration report, it says right here, the number one area those U-Haul and people moving to, the renters are moving to Huntsville, Alabama, and then among the top five, they're also among the top five are in Knoxville, Tennessee. I know you don't have anything in Knoxville, but you have some. It's
a little south in Chattanooga, yeah.
Yeah, a little bit of south in Chattanooga. So and also let me see, and Tennessee, right? Tennessee, part of the Tri-Cities.
Yeah.
So out of the top five metro areas with the highest inbound of people moving into this the trend, your Spartan Invest are in the top 3 of the 5 markets. Where we've seen an influx of potential migration of not only of renters or whatever. So when people move into a new area, they have to rent because they're not ready to buy, because it takes time to get in the community for a few years, save up the down payment, whatever, before they can buy. Meanwhile, they're gonna rent. They're gonna pay you a very high rent for risk investors that we're working with. So all is all good. So let me go through a couple of things. How migration impacts real estate market according to this article? Well, it impacts very positively, obviously, because you have job growth and population growth, migration growth that'll give our investors very good cash flow returns on investment, very good appreciation potential. And so let's see what else we can find. How migration data can inform investors. Well, we are, as a turnkey providers, you and I, we are informing the real estate investors out there from out of state. You got to get in. This is a window of opportunity. Is very small, believe it or not, right? So investors, when they hear our presentation right now, they need to have a sense of urgency to pull the trigger in light of all the challenging things going on in the real estate market right now. So you need to focus on your goals and make this happen, because this market are not going to wait for no one. Before you snap the finger, this market will be way at the peak if you don't take action now, while everybody is all distracted by all those negativity out there. So you get into it, like you and I know, how investors make money. You get into a market before everybody finds out about it, because you lock in the purchase price, you lock in the rent, you get your multiple streams of benefits as an investor. So let me see what else. Again,
I was gonna say, and Seewing, look at that. So I don't know if you saw that, Austin, Texas. It said that their median home price now is $644,000. I'm not even sure if that's a new construction or if that's just an existing property. I'm assuming it's kind of the existing. They just kind of pull the data and figure out what the median income is. So you look at that, 644,000 for a house in Austin. You can buy a brand new house, new construction, in Athens, Alabama, which is just 20 minutes to the west of downtown Huntsville, for $245,000 to $285,000, brand new, 3-bedroom, 2-bath, one car garage.
Absolutely. It's just a no-brainer. So us investors, our out-of-state investors that we work with, you gotta, us turnkey providers, property invest in my organization. The year doesn't work. We are staying ahead of the trend. We get in before things, before the rest of the people knows about it. So let me see what else we can discuss. Fastest rising rents, and so yeah.
And here's the question, Seewing. Why are people moving to Tennessee and Alabama? Right? I can tell you, it's the lower cost of living. It's the lower cost of housing. It's a better way of living. And it's a beautiful trade-off. Like you were talking about the migration trends. It's a beautiful trade-off from where they were living before. They can actually step up their quality of life living in states that don't tax them to death, especially on, just everything. And it benefits us as investors because our cash flow is predicated on after all of expenses, right? So what is our cash flow after all expenses? Well, Alabama has, besides Mississippi has the lowest property taxes in the United States. Alabama is second at 0.675%. So under 1%. I know Texas is 3%, right? So when you're looking at, okay, here I've got some capital. I want to put it in a market that is growing, emerging, that the rents are increasing, that there's really a stable and diverse economy, and there's really significant job growth. When you've got job growth, you've got population growth, and then your housing needs increases too. So, I can't say that we masterminded this and we were so brilliant that we knew, this is where everyone was migrating. We didn't have this data, until I just saw it this morning. And so we just happened to, in our research leading up to when we started the business and then researching going into new markets, we just look at what's emerging, what's growing, where can we still get cash flow, where can we still get a low barrier of entry, where the price point on the property is not $300,000. You can get a brand new house for $250,000. And that works for us in Alabama and Tennessee. And it affords the real estate investor who wants to say jump into something new with low maintenance for a really long period of time at a reasonable price with an exceptionally good cash flow and rate of return, it's an offering that really needs to be strongly considered.
Oh, absolutely, totally value add. So yeah, my recap is this I mean, there's so many benefits. I mean, all the metrics, all the stars are in alignment here in the Huntsville, Alabama market. So I mean, everything is really looking good. I mean, long-term growth is good. You can get cash flow, brand new house to buy for investors. Just such a value add and very good rent. Skyrocketing rent will also spread into your region. So even if the cash flow right now may not be as high as some people would like right now, but you get whatever rent you can with a little bit of cash flow right now. But in the future, again, you date the interest rate, but you marry the house. So therefore,
well, look at this. I mean, I'll just throw some numbers out there so people are kind of going, hey, what could I expect? So I've got a new build here in Athens.
you want to share the screen? Are you able to share the screen?
Yeah, let me move this over. Let's see if I can
That's okay.
share screen. And that's high school Brooklyn. Oh, right here. Pull that up. I want to share this.
There you go. Perfect. All right.
Yeah, I can't see what you see, so I'm hoping that looks like you can see it. Okay.
I can see it. Yeah.
All right, perfect. So here we've got a property. It's a brand new brick, all brick around. It's on 1215 Summers Ridge. It's in Athens. You can see the purchase price is $285. We projected a rate of return on the 1850. However, we do market the property for higher than that, 1900. A lot of times we're getting that as well. So here, looking at if you were to buy this property cash, the annual net income at 1850, if we got that rent, 18,583. If you were using financing, 20% down, 30-year fixed, we're looking at call it $2,300 a year. But this is where I think investors really need to, when they're evaluating a property, really have to recognize that you don't buy a property for year one, right? You look at this is a long-term buy and hold. The average time an investor holds a property before they decide to do something with it is between 5 and 7 years, right? So let's call it 5 to 10, because that is, I mean, I still have I've been doing this for 13 years. I still have investors that have the same original properties they haven't sold, right? So because this is not a short-term rental, it's a long-term rental, it's a long-term play.
Right.
So when you go to the leveraged cash on cash, because most investors, let's say, they use leverage or financing to acquire these assets. So, year one, you're looking at cash flow of nearly $2,300, but look at year 15. You're almost looking at $12,000 a year on one property. Multiply that by 10 properties, you've got $120,000 coming in annually. That is what we are doing. This is what we do. You and I, this is what we do to help investors build a real estate portfolio. So don't make the decision on year one, because you're not selling it after year one. Look at year 5, look at year 10, because that is where you really see the compounding of not only the rent inflation year over year, let's say at an annualized rate of 3%, and that's over a fixed payment. So your payment never goes up, but your rent does, your cash flow goes up, your expenses go up as well, your taxes and insurance, but usually the rent outpaces those other variables. And that is why, and we've actually factored the increases in the rent and the property, or sorry, the insurance and the property taxes in our pro formas. We're not trying to sell you the pie in the sky, but this is, and again, these are just numbers on a piece of paper. Does this actualize? In some cases, better than what we show, some cases less than what we show. But what you have to look at is just even look at the capital appreciation piece of it as well. We used 9% for this year because we recognize from various data sources that that's the projection is 9%. But I've got a 10-year, 20-year, and 30-year capital appreciation that looks at, you go up to from 37,000 up to 228,000. That property is growing in value just by you holding the note, holding the paper, which the renter is buying down your mortgage, increasing your principal, reducing your tax liability through depreciation, increasing through capital appreciation, and then you've got the cash flow that increases year after year. So this is why investors go for real estate as a hard asset to produce wealth, because it's the ideal investment, right? It pays you in 5 ways. And so when investors really get this, you can look past year 1 and go, $2,300 doesn't look very sexy, but look at year 10, look at year 15, right? That's when this gets really sexy.
Oh, that's absolutely. You and I try to preach to the choir for quite a while now, and income property, single family homes is a multi-dimensional investment asset class. Is a tax favored asset class. No other asset class in the history of the world can equal to so many different ways that real estate investors can get paid: cash flow, appreciation potential, tax benefits. And then leverage using amazing 30-year fixed rate loan.
Yeah.
Is an inflation hedge asset you can make the argument is a recession-proof real estate investment methodology as well. So what more can we say about this? I mean, yeah. So
yeah, and you've got these properties. I know this is just one of many. We've got 6 right now that are 6 new builds that are currently available. I probably have 20 properties on the Shopify site, which I know you sent out to your listeners. So go and you go to the Shopify site, go to the link, check out these properties and see if there's something there that fits for you, because I don't think waiting is a good strategy. And here's why. We don't really know what the interest rates are going to do. We've seen that they have risen. They're projected to continue to rise through the end of the year. And then we're hearing that there might be some softening at the beginning of the year, but nobody knows for sure. It just does not make any sense to wait now. Just lock into that rate. And if it does go down a year from now, 2 years from now, you refinance to the lower rate to increase your cash flow, if it makes sense financially.
Absolutely, absolutely. I totally agree. So with that in mind, I mean, how many of the new builds we have on your current inventory? I know they're going to sell very fast. What about projecting down in the future? I mean, what is your how are you going to bring more great, amazing new builds into your inventory?
Yeah, great question. So we have 6 currently available right now. We have 28 in permitting. And half of those have already started. So we'll have another batch. We like to do 2 to 3 at a time to make sure that we've got the quality there. So in Q4, we'll probably see another, let's call it 5 or 6 before the end of the year.
Oh, that's yeah. It's not that many because we always have more out-of-state investors that want this kind of high quality, high value new builds than there are enough inventory. So demand from our investor database is much higher than the available supply of this great new construction homes. And so first come, first serve. So
yeah, and I'll tell you this too. I mean, we also have, we're not discriminating on who we are going to sell these new builds to. We prefer to sell them to the investor because our business model is such that we want to manage the property. And that's where Spartan Invest and Atlas Rental Property, where we make our residual income, is through the actual management of the property. However, we've had primary homeowners approach us and ask us if we would be willing to sell our new builds to them, which we have. So it's kind of more than just the investors that are competing for these properties. We also have primary homeowners that if we decide to sell it to them and they've got an offer, we will consider it.
Well, absolutely, because in your region of the U.S., in your Alabama, Tennessee region, very few national builders are entering your market, because the national builders usually build very high-end entry-level homes, at least 400, 500K, $1 million. That's how they make the money. So working with a local builder is a value add for our investors. That's what you do, and this is a very, very rare opportunity
Yeah, and there's no shortage of new builds for multifamilies. There's a lot of multifamilies being built in the Huntsville area right now, but a lot of people really like that single family, and there's just not a lot of local builders like us building the starter single family home.
Yep, sounds good. Sounds good. Anything else you'd like to add on this exciting new inventory market?
I love the new construction. Huntsville, Athens, Decatur are just super hot areas because of just the exceptional job growth and the population growth. The housing demand has increased exponentially. And like I said, Emily, my leasing agent up there, she looks like a rock star because, it's like, she's like, got a security deposit, got another security deposit. Like she's just rolling with it because of how hot that market is. So if Huntsville, Athens, Decatur is of interest to you and you are looking for a reliable, reputable operator to get you into one of these properties that has exceptionally good cash flow and a very bright future on the capital appreciation, then definitely go through Seewing, get to that Shopify site, use the password, and take a look at what we got.
Sounds good. Sounds good.